Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, after an initial upward bias on Wednesday, the market reverted and now follows on into Friday to the downside as the dollar index resets its 5-month highs around 106.20. Hawkish signals from federal officials indicating no immediate rate cuts further dampen the Australian dollar's bullish mood. Additionally, disappointing Australian employment data released Thursday also weighed on the Australian dollar, showing job losses and a slight increase in the unemployment rate that now casts shadows over the RBA's forecasts. In March, Australian jobs data declined by 6,600, falling short of its estimates, while the unemployment rate rose from 3.7 to 3.8. So looking at the technicals, they have broken down. The trend has come back into play to a bearish case. So all eyes look towards the support level, which is seen around 63, 62.70 and reassess from there. I do anticipate a bullish move off this level like previously seen back in September, October last year, and therefore look for a recovery back towards 65 cents. The euro demand dwindled Thursday and eventually wore down the bullish threats as the US dollar index resets its highs around the 5 months of 106.20. And from that, now looks back towards a potential downward turn that could see the move back to the key level of 105.15.35. Hawkish comments and Fed Chair Powellman's indication of no imminent rate cuts sparkle speculation and unsettling the market and leading to expectations of rate cuts now seen in September and December. And there are even talks of a single cut this year in November. Thursday's Fed comments echoed reluctance, with the New York Fed President Williams highlighting a strong economy and Atlantic Fed President Bostic advocating patience, citing sluggish inflation. So with the technicals breaking down and the RSI rejecting the midway point at 50, could see further weakness as I mentioned, and with the resistance around now 106.65. The dollar yen has reverted back towards the downside and now pressures this key level, which is seen around 153.70. Do note a break there or a close under New York would give further indication to the downside and give a trajectory down to 150.80, and with immediate target seen at 152.5. Heavy technicals, well, the market does support a bearish case. Let's see if we can trigger this level at 153.70 to push the market further and therefore look towards that key target of 150.5 and reassess. Pound also weaker and now looking back towards that key level, seen roughly around the 123.35 area. Technicals are heavy and a trend coming back into the bear case does support the view to the weaker play. But like the most of the markets, I feel there could be a bounce off 123.35 and look for a correction back to 125. It would seem the market's got into high volatility as spot gold bulls rejoin the market as geopolitical risks reignite safe haven demand. Having failed taking out the level of 2,360.66 yesterday, we've reverted back to the top side of 2,400 and now put a potential target of 2,440.46 because the technicals have once again rebounded off the midway point. In latest news, the Middle East tension returned to the forefront after reports of an explosion in Iran, prompting traders to swiftly re-enter the market and reintroduce the risk premium into the gold price. And therefore, let's see how the market plays towards this top side. I'm a little bit on the careful side in any call towards this top side. So I still would like to sort of sit out for the moment. My overall view still remains to the downside, but we do need to take out that key level of 2,366 to ignite the move down. And wrapping up with oil, well, of course, with the recent news of an explosion in Iran, the market has showed a Marabouzu candle, very strong, and therefore could see a push up towards 85.5 and onto 86.40. But I'm a little bit skeptical of this move as well, and therefore on light volume, no doubt the market is just panicked and rallied, and therefore could see, like previously, rejections from that top side anywhere from 86 to 88 being broad, and therefore see a pullback eventually to that support level, which was rejected overnight at 81.70.90. Well, that's a wrap. Thank you for joining me, and as always, look out for the interest rate report, and I hope you enjoy the great start to the new weekend.